All right, welcome back. Okay, let's be happy. It's a new beginning, new life. And I just want to let you know, and I'm going to speak a little bit slowly because this is being shown in the, being heard in the radio station in Los Angeles, New York, Philadelphia, in the Chinatown area, Seattle, Redmond area, and Boston. And this is also in our live Facebook. I'm happy to introduce my favorite regulator, and this is our personal joke, but he is really my favorite and a lot of people's favorite regulator. Chairman Jelena McWilliams was sworn in as the 21st chairman of the FDIC on June 5, 2018. She serves a 6-year term on the FDIC Board of Directors, and she is designated as chairman for a term of 5 years. And we're so honored to have this beautiful, out of the box regulator, Jelena McWilliams. Good morning.
Well, Faith, thank you. That is such a wonderful introduction. Actually, I chuckled and I'm humbled with the way you said that. And I see a lot of wonderful faces that I've seen around the table as we talked about this issue so much. But, I just want to start with something that I think is absolutely necessary to say. I consider California to this day my home. When I first came to the United States in 1991, when I immigrated, I came to Stockton, California, and I lived there for a number of years, and then the Bay Area. And I still feel like a native Californian, even if I don't sound like one. And in that, in the context of my days at UC Berkeley and in the Bay Area, I have created a lot of lasting friendships, and a number of them with my Asian American friends. And I just want to tell you that my heart goes out to the Asian American families. In particular, when I was living in the Bay Area, my neighbors, my friends, my colleagues, a lot of them hailed from the Asian American community and Pacific Islanders. And I have been just really taken aback by the rise in violence. And to your point about it being a silent community, truly hardworking, dedicated individuals who made this country better along the way. And I just want to let you know that I know a lot of your members are in the community that hopefully is not being targeted, but we absolutely have no place in the United States of America for that type of action and violence against any group, and certainly not against the Asian American and Pacific Islanders. So I just want to say that up front, because as I was listening to the prior session, the fact that your employee in Daly City has been attacked is just absolutely abhorrent, and I'm truly sorry. I'm personally truly sorry.
Thank you, Chairman. Let's talk about your journey being FDIC chairman. You can relate to this as a woman, as a Women's History Month. Can you walk us through your journey?
Sure. I'm happy to, because my journey really begins almost to a month. It was July of 1991 when I arrived to SFO, San Francisco Airport, as an exchange student by myself with $500 tucked in the jeans of my in the pocket of my Levi jeans that I had to travel to Germany to buy. And my dad used his entire 1-month pension as a birthday gift to me to buy me a pair of Levi's jeans. But my idea about America being this inclusive place, a land of opportunity, a land where you can come and work hard and create something for yourself and your family and your future generations, really is what prompted me to decide to come to the United States. In high school, I went to Lodi High for 1 year, and then I went to community college and eventually UC Berkeley as an undergrad, and then for law school as well. And I started my career really as a lawyer in a Silicon Valley firm, and I from this day I really truly hold California in my heart. And I came to a conference in Washington, D.C. In 2004, and I said, I just feel like my destiny is in D.C. And I didn't have an easy life. I basically, when you come to the United States, you have an accent, you have $500, you don't really have your family to support you, have nobody to really support you. you struggle to understand how to fit in and how to become a part of the community. And you frankly struggle to survive. And I was listening to Commissioner Shiroma say how a change in a utility bill for $5 for somebody means a difference between buying a loaf of bread and not. Literally, I was one of those people that $5 in a monthly utility bill did make a difference for me. And so, you know, when I had an opportunity to come to Washington, I was already a lawyer, and, you know, I was able to, I was a single mom at the time. I had a 2.5-year-old, and I brought my parents from Serbia to the United States to give them a better life and to keep the family together. And I came for a conference, and I basically said, I feel like my destiny is here. I want to be able to impact history. I want to be not on the sidelines. I want to be involved in the way things are done. And so I interviewed with law firms in Washington, D.C., had an offer from a law firm, came to D.C., worked, moved the family. I joke it was one of the first JetBlue flights that connected Oakland, California, and Washington, D.C., 12 suitcases, 2 elderly parents, 1 cat, and 1 small child. And here we go to fulfill my American destiny. And this was 2005. I worked at a law firm first. Then I had an opportunity through usajobs.gov, which I joke is a kind of like this black hole of the resume job seeking world. You send your resume in, nothing ever happens. You don't hear from anybody. But I was able to get a job at the Federal Reserve, and this was in the early 2007. And I was really excited. I landed as a lawyer in the Consumer Protection Division at the Federal Reserve Board of the Governors here in Washington, D.C. And what nobody told me was that the subprime crisis was upon us. So I had baptism by fire, working with consumer calls, you know, people not knowing who owns their mortgage, how they're going to modify their mortgage, which bank they should be working with, which servicer they should be working with. It was just truly a desperate time, and that kind of brings me back to the pandemic and where we are now. You know, a few jobs later, I after the Federal Reserve, I had an opportunity to work in the United States Senate. Eventually, became chief counsel on the Senate Banking Committee, and after that, I became a general counsel of a large bank in the Midwest. And then a call came from the White House whether or not I would be interested in this job. Now, lo and behold, I didn't know that this job would come with a pandemic during my tenure, but I'm sure we'll talk about that in a second. But that's kind of my journey. You know, I sold Cutco knives along the way. I worked closing shift at Blockbuster in Stockton, California. I worked at the country club as a hostess. You know, you name it. I sold cars. I had actually a salesperson license in California to sell motorized vehicles. So I would say along the way, I became a jack of all trades and hopefully an expert in at least one or two. But that's certainly, you know, my American journey. And I know that a lot of your members, especially who are immigrants, had a similar journey. And I like to say that all of our stories have a common thread, which is of, you know, survival and struggle to survive, and a belief that if you can make it anywhere, you can make it here in the United States of America through hard work. And so I'm hoping that we can create a regulatory environment that makes that available and possible for many, many generations and everybody in our society.
And this is why I think you're really a great regulator, because as an immigrant, right, the journey of buying a Levi's, and I'm sure that's like you were so very proud of that, wearing Levi's and the $500. I mean, you're richer than me because I only had $20 when I moved here to the Philippines. So,
well, Faye, to make clear, all of my 500 was borrowed. My parents, you know, had to pay it back, and then there was the wars in the Balkans and the hyperinflation. So the $500 became an equivalent of like 5,000 or 6,000. So it became prohibitively difficult to pay, but. You know, I look at those early struggles as a way of not a sad story, and not a sad story because, you know, you forge yourself through struggle, and every little battle that you win, from being able to pay for your heating bill, to being able to buy that loaf of bread, to being able to feed your family, to being able to get, you know, to a community college and later college and get your degrees and get a job, like that struggle is something that builds you. And I think I see that in a lot of people who had a common background of immigrating to the United States, including yourself.
That's true. So let's talk about financial inclusion. You know, this is sad. I mean, United States is the richest country in the world, and yet we have 46 million credit invisible. We have 7 million underbanked, and we have, or 7 million unbanked, and 25 million underbanked. As a regulator and with our experience, talk about financial inclusion where everybody should have availability in banking.
Yeah. And so I think this is a huge issue for our financial system. And here, really, this is where I use my personal story to explain why it matters that we bring people into the financial system, into the fold, because frankly, we're at the precipice as a society of facing that some members of our society don't feel like they belong. They feel like they're on the outside, they feel disenfranchised, and that shouldn't be the case, as you mentioned, in the richest nation on the face of the planet. And so as a regulator, we look at financial inclusion as something that is not just a good thing to do, but a necessity for the stability of our financial system. That's my personal view. I think it's absolutely necessary for our financial system to be able to expand its perimeters and include as many people into the fold. And, I use the story of my $500 and arriving to the United States. I put the $500 into a checking account with a bank that I still have literally the same checking account. I tried to apply for a credit card because that's what everybody in America had. Everybody was using a credit card, and I was denied because I didn't have income, job, assets. I didn't have credit history, so I was a perfect ninja: no income, no job, no assets. And so I was able to open up a secured credit card by using a portion of my $500 to secure a credit card, and then that led to an unsecured credit card that led to an ability to get student loans and purchase a vehicle and purchase eventually a home, which is the dream of American home ownership and how wealth is built in the United States. And so I use that story to highlight to people that it is imperative that we bring more people into the financial system and that we think through our regulatory framework how we can bring people and allow them to be a part of the system. And when we look at the people who are not part of the system, a number of them used to be, and they got disincentivized to be a part of the system because either they were paying high fees or they had low balance accounts, and then they were, charged monthly account fees or overdraft, et cetera, et cetera. So we are working with banks through the Bank On Coalition to create safe checking accounts. And we have a number of banks who have signed up to provide low to no cost accounts to a number of the millions of Americans that you mentioned, 7 million in particular that are unbanked. And then we're also thinking through our regulatory framework. How can we ensure that people have access to credit? There's that famous or infamous, however you want to look at it, Federal Reserve study that says that I think about 60% of Americans don't have $400 a month to pay for the emergency expenses. And so when you think about it, that the majority of Americans don't have $400 a month if their vehicle breaks down or if they have a medical bill or if their utility bill goes really high that month for various reasons, you have to think about how can we make sure that they have access to credit that's responsible, that has, requisite consumer protection. And one of the things that we did at the regulatory agencies in DC is create an opportunity for small dollar loans to be done through banks so that we can regulate this product through the banks and ensure that customers are not overcharged fees and that consumer laws apply. But financial inclusion is something that we're actively working on. And frankly, it is a passion of mine. And I believe that if I do nothing else by the time my tenure at the FDIC ends, being able to expand access to include some of those 7 million Americans into the fold will be probably the most, I would say, honorable legacy I could leave behind.
Yeah, and I think, we're about solutions, right? MDIs, translation, Minority Depository Institutions. So the Minority Depository Institution, MDIs, and Chairman, I'm just talking slowly because it's being translated.
Is this your cue to slow down? Because I speak 1,000 words a minute, so I will slow down too.
Okay. So the MDIs are the community banks that is in your neighborhood. So the MDIs to me is part of a solution to help those people that have no credit score or their credit score is very low. and a lot of the MDIs are regulated by FDIC. By the way, FDIC, you should know that every time you go to the bank, you will see the word FDIC. And, we're teaching this with the US Marines, and this will be shown again when we teach next month. And sometimes they say, oh yeah, I've heard of FDIC. So this is great to know that the woman, the person, and I'm just really reiterating the women's month is Chairwoman McWilliams is leading this regulation. So can you talk about the MDIs and what does FDIC, how can you help MDIs?
No, absolutely. It's a great question. And frankly, I knew about the minority depository institutions before I joined the FDIC, but I failed to appreciate the impact they truly have on their communities. And so the FDIC as a regulatory body has the largest number of MDI institutions under our regulatory fold. And early on, I met with a number of MDIs during my tenure. I met with a number of MDIs, and I basically said, what do you need from us? How can we make your job easier? How can we remove the barriers that you have in the way that regulators can remove so that you can go ahead and help your communities? And so I listened and listened some more, and I realized that, there are different approaches depending on whether the MDI is, an Asian American MDI, African American MDI, Native American MDI, Hispanic MDI, etc. Some of them serve minority and low and moderate income communities. Some serve predominantly immigrant communities. So there are different needs for those. But there was a common theme for all of them, frankly, that we tried to address by increasing representation at the regulatory body that is the FDIC. So we established the MDI subcommittee at our Community Bank Advisory Committee, which consists of 9 MDI executives who meet twice a year, and they basically share best practices, share ideas. They educate our staff about what's going on in their communities. And we also tell them how is the FDIC thinking about issues that those communities and the MDIs face. We also, I realized that the story of the MDIs is not told quite often, and it's not told through the lens through which it should be told. And so we started I would call it a PR campaign, a public relations campaign. We filmed MDI origin stories, which are videos to promote MDIs, where we featured banks that have minority depository institutions, banks that have been in their communities for a long time, trying to move the needle on economic prosperity, inclusion, etc. We engaged in partnerships with MDIs and non-MDIs. We basically created, I like to call it speed dating. And then my lawyers tell me, don't call this speed dating, we're the FDIC. And I said, well, this is not your grandmother's FDIC, and we're going to call them speed dating. So we basically held a roundtable events last year and the year before, where we put MDIs and non-MDIs in the room and try to see if there's an opportunity for them to create business partnerships and collaboration. And we had great success. We even had about $10 million in deposits come to 3 African-American minority depository institutions through these discussions and partnerships. We're now exploring something that frankly has never been done by a regulatory agency. And first I was told we can't do it. Then I said, well, we need to do it. And then I was told by our lawyers, well, maybe we can figure out how to do it. And finally, we're doing it. And so we're creating an investment fund. It's called Mission Driven Bank Fund, and it's for minority depository institutions and CDFIs. And this is going to be the fund set up by the FDIC, but not operated by the FDIC, because as a regulatory agency, we're not allowed to operate investment funds. So we're going to hire an advisor, an investment advisor, who's going to operate the fund. And the fund is going to be basically funded from contributions and donations from outside entities. We have secured a $100 million commitment from Microsoft. We're working with other entities that are interested in contributing to this fund. And basically, the fund is going to invest into minority depository institutions and CDFIs and provide the capital investments that then these institutions can amplify in their communities by lending and through increasing home ownership. We have also published a resource guide for how MDIs can collaborate with others, as well as CDFIs. We have changed our MDI statement of policy to basically provide support for the MDIs through our supervisory channels, including technical assistance. And we have changed our the way that MDIs would bid on failed banks. You know, people don't think about the FDIC often as a resolution authority, meaning we resolve failed banks. Usually when there's a financial crisis and you see us and you hear about us resolving banks, you think about us in that context. But in what I call the peacetime, people don't think about us as a resolution authority. And so there's an opportunity when a bank is in the failing state but has not failed yet to purchase that bank, and that's our preference as a resolution authority, to sell a failing bank while it's still open. And quite often the MDIs lack technical assistance or technical understanding of the process. So we have changed our process for how banks bid on failing banks to acquire a failing bank. And we now give preview and an expanded window for technical assistance, so the MDIs have a longer period of time to bid on non-MDIs and failing institutions, as well as failing MDIs. And then finally, we also published a research study outlining the structure, financial importance, social impact, and just general importance of MDIs. And we'll continue to publish that study. So really, we have kind of put the lens on what MDIs and to some extent CDFIs do in their communities, and created a platform through the brand that is the FDIC and the tenure and the history that the FDIC has behind it. We lent that platform to MDIs through our efforts.
Music to my ear. Being a CDFI also, and like Royal Business Bank, I'm sure they're very happy now that there's going to be more investment. And, on Project Reach, actually, which is the next panel, MDI is a major issue, right? How do we provide them technical assistance? And that way they can be more progressive in helping their local community. And I love the access to capital to MDI and CDFI with this COVID-19, and we'll talk about this now. It's, we have to really go outside the box, right? March, oh my gosh, it's been a year now, no? Since we've been the lockdown. I still remember that March 16. And since March 16, you think I work hard? I work harder now. I mean, we really have to pivot everything. How do we help the small businesses? Even right now, I'm being texted by a small business. Ms. Faith, can you please help us with small business loans? And because a lot of the small business do not have credit scoring, and the banks still the safety and sound lending. So thank you for doing that. And speaking of that also is innovation, right? And you just hired a chief, the chief
innovation officer. Yes.
Officer. I know Dennis Santiago, I think, applied for that, but he didn't get the job. But I'm sorry, it was just a joke. But thank you for doing that. I mean, Fintech, to me, this is my opinion. Fintech should also be subjected to CRA, because how do we know that they are lending to the low moderate income? So can you talk about how this innovation works now? And you're right? Everything is in the cell phone banking, everything. So please do.
No, absolutely. The way I look at innovation in financial services, generally regulators have looked at it as a negative, right? Because it's a risk, and a regulatory body, a regulatory agency doesn't like risk, right? We're supposed to be as much risk averse. The truth of the matter is that I think that's not the right view for innovation and specifically fintechs, et cetera. I believe that everything we do carries some amount of risk with it. Can you manage that risk? And from a regulatory perspective, can you supervise for that risk? Do you know what's going on in the system? And we must make sure that we don't stand in the way of innovation as a regulatory agency, because frankly, innovation is able to, and technology are able to democratize finance. Some of these fintechs are able to dip below the 720 and 620 credit scores and use their technology and algorithms to basically lend to a variety of customers that otherwise would not be banked. I mean, these are people who go to payday lenders. These are people who, utilize rent to own. These are people who go to, layaway if it still exists in the stores. And they never really, through those actions, never really become a part of the banking system. They never get that credit score number. They never are able to move up the chain. So I would like for them to be just like little Jelena, be able to become a part of the banking system. And so we have taken a position at the FDIC that innovation is a good thing, that innovative technology is a good thing as well. And we would like to be able to have an opportunity to allow banks to team up with fintechs, to expand the services and products that they offer, to expand their customer base, to offer more products to entities and customers that otherwise don't have these, small businesses, as you mentioned earlier, and consumers that don't have checking accounts, savings accounts, that don't have, they don't have credit lines and credit cards. But we also want to make sure that we can bring them into the regulatory fold so we can appropriately protect consumers and small businesses on, consumer protection, and also to make sure that the business, that the safety and soundness of the system is not impacted negatively. So I agree with you. I think there's a great opportunity to allow banks to work with fintechs, to allow fintechs to prosper in the regulatory environment where they get, very similar or same type of regulation, depending on their business model, as the banks do in this space. But we can democratize finance by expanding innovation and the availability of products and services to customers, and frankly by increasing competition, which will drive the price down for the customer and the consumer in general.
Great, thank you. And because this is a town hall, we welcome all the questions. So we have a first person here to ask question, our good friend Holly Ham. Holly? Unmute, please. This is our new word now.
Yeah, so speaking of technology, yes, I need to learn where the unmute button is. Thank you, Faith, very much for this opportunity. Chairman McWilliams, I always enjoy hearing your story. Every single time I'm honored to be in your presence. So you are such an incredible inspiration. Thank you for having me. My question is about FDIC's DEI strategic plan. The FDIC recently released a new diversity strategic plan outlining your 5 C's. So that's culture, career, communication, consistency, and community. Will you share with us more about what you're planning and what you hope to accomplish with this new strategy?
Sure. No, thank you. Thank you, Holly. That's a great question. And thank you so much for your compliment. I very much, I'm humbled by it. So when I first came to the FDIC, as the chairman, as the leader of the organization, you want to know how are people doing? Do they feel like they belong? How are we doing on diversity and inclusion? And, I was presented with numbers and charts and statistics, and, it looked like on paper, we're doing pretty well. And especially compared to the other regulatory agency, we were actually doing really well. And then I said, all right, so that's all fine. That's all great. But how do people really feel? Do they feel like they belong? So I started having conversations formally and informally with people, both through meetings and organized discussions and outreach internally, but also in the cafeteria. I would pick up my tray in the cafeteria and just come to somebody's table and say, can I sit with you? Can we just talk? And I think first they didn't realize it's the chairman. And then they would, they thought it would be rude not to allow me to share a table with them. And then about 5-6 minutes later, they're like, oh, that's the chairman. And then we would start a conversation about, hey, how are you doing? Why did you come to the FDIC? How long have you been here? If you were me, and I would say this, actually, for the purposes of the first 5 minutes of this discussion, don't even tell me your name. I don't want you to feel uncomfortable that I remember your name. But if you were me and you could change one thing here, what would it be? And they would tell me. And over time, I got a sense of the culture, right? And culture is something you can't measure by numbers. Culture, you either have a sense for or you don't, because the numbers could be misleading. And I learned that, we have people who don't feel like they belong. They spent 20, 30 years at the FDIC and they still don't feel like they belong. There's us, there's them, and there's these silos about how we are perceived internally and perceive others. So I said, we need to change our entire diversity and inclusion strategy. We need to have an actionable, measurable plan. So we have created this new plan that you mentioned has the 5 C's that is different than I frankly believe any other regulatory agency. And you know, we'll test it, and if it really produces the results we're hoping to produce, maybe we can trademark it to others. But really, the idea is to steadily increase racial, ethnic, and gender diversity of our workforce, including across our leadership positions. We established an executive level task force to promote diversity, to promote inclusive workforce at every level from the top down. We have improved the way we recruit, hire, and onboard examiners, and I'll give you some examples. We have identified challenges to daily operations, to our employee retention, and we changed that as well. Again, I'll comment on that in a second. And we have changed how we contract out. You know, we spend a lot of money as a government agency on contracts with outside entities, and we have increased our emphasis in the contracting on the participation of minority and women-owned businesses. And we are also working with financial institutions to strengthen their diversity programs. So when you talk about all of that, it sounds, you know, kind of amorphous and kind of a big picture, I would say, strategy that we have. But really, it's little things that you can tweak organizationally to increase diversity. And so here's one thing we did. We train examiners. So FDIC absolutely depends on its bank examiners to conduct the supervision of banks. And there are slightly over 5,000 banks in the United States. We're the primary federal regulator for about 3,700 of those. So we have the largest number of banks that we supervise. Our examiners travel on average about 80 days out of the year. So think about it, that's 80 days, at least 80 days away from your family. And that has disparately impacted people in the middle of their careers, and especially women with small children. So we have changed the ways we do this by reducing the number of days that has to be spent on the road, increasing technological investment at the FDIC so more examinations can be done offsite, and actually allowing an opportunity, especially to working mothers, to be a little bit more at home. And then on the issue of kind of a promoting a diverse cadre of people within the FDIC, we had one of the best ways to get a different job within the FDIC is to apply for what we call an expression of interest. So if a position is going to be posted, we have an expression of interest announcement. And in the past, you used to need your supervisor's approval to apply for that expression of interest. And in a lot of cases, that supervisor's approval would be a deterrent to you applying because A, you didn't want your supervisor to know that you're looking to apply to this job, or the supervisor may not want to lose a good employee to another opportunity. And so we have eliminated supervisor's approval so that now you can freely apply for another job at the FDIC, test it for 3 months, and then apply for the permanent placement. And these are little things you can do to actually make the culture better, make more opportunities available. But really, in reality, I have had a number of talks with several hundred employees in attendance each time when we talk about what does compassionate leadership look like, and how can we lead with humanity, and how you should be the boss you want to have. And so everybody needs to take a look at themselves, and this is really where diversity, equity, and inclusion begin. Do you know yourself, and do you believe that you're acting in the best interest of humanity in your everyday interactions, whether at work or otherwise? And if we start with that as a starting point, everything else is about tweaking the edges and tweaking the formulas we have. But I'm actually really optimistic about diversity plan, and I have really the highest regard for our Office of Women and Minority Inclusion Director, Nikita Pearson, who's spearheading this effort for us.
That is so incredible. I hope this becomes a blueprint. I hope federal government uses it, and then other institutions, if you think even about private sector or nonprofit. So that is really incredible. Thank you so much.
No, thank you. Thank you. And if you go to our website, you can find our diversity, equity, and inclusion strategic plan if people want to take a look at it, because we spent a lot of time effectively through these things, and not just in amorphous kind of a big picture items, but also in kind of a nuanced item by item, actionable items that can be measured.
Yes, absolutely. No, it is a great, great DIA strategic plan. We'll continue to take a look at that. Thank you very much, Chairwoman Williams.
Thank you, Holly. This is why we're National Diversity Coalition and all these ladies here. Sorry, guys, I'm gonna put you at the last because this is Women's History Month, okay? so let me ask Ofi, do you have any question to the chairman, please?
Yes, thank you, Ms. Bautista. Thank you for narrating. And Chairman McWilliams, thank you so much for being here today. I just wanted to ask you, so just considering how COVID has just been devastating with job loss and business closures, I noticed that the FDIC does provide some consumer assistance information just so we can know our banking rights. And I was just wondering if there's any programs that are possibly in talks just to help consumers along. You mentioned the mission-driven bank fund that just sounds fantastic. And also on a personal note, if you're comfortable, I'm just fascinated with your story. And I'm wondering what brought you out of the private sector into the public sector and just what sparked that. Thank you so much.
Sure. So let me answer that one because it may be an easier question to answer than some of the other stuff we're trying to accomplish with the pandemic. But I have been indebted to this country on so many levels. I remember when I was thinking about leaving for the United States, my father, who had a very difficult life and survived World War II, et cetera, survived communism. He basically asked me, why do you want to leave? You know, you're going to be a second-class citizen in a foreign country. And I said, you know, I would much rather have an opportunity to be a first-class citizen in a foreign country. And even if I don't succeed, I won't be a second-class citizen in my own country. I'll be a second-class citizen there. And so the fact that I have been able to go from, you know, this poor immigrant kid with $500 arriving here on her 18th birthday to what I am now, FDIC chairman. And I like to think it's a midpoint. I like the sky's the limit in the United States. I feel indebted and I have a tremendous debt of gratitude to this country and the opportunity. And being in public service is really, there's nothing more rewarding. You know, it's not always the most lucrative job. I certainly never had anybody clean my house or cook my meals other than me. You know, I do everything for my family. I'm a big Costco shopper, but you know what? I'm willing to do all of that and to give back what I can to the United States and to make our system better and to make our system work for everybody, because I do think there should be many little Yelenas out there, you know, exceeding what I have been able to accomplish, and we need our system to do that for them. With respect to the pandemic, I would say we have done a number of things early on during the pandemic when everybody was just in utter shock. You know, I remember, Faith, you came to Washington, D.C. in March. I think it was March of last year, early March. And we were talking about the pandemic, and you said, well, you know, we'll see how it goes, and it's bad. And it was just the beginning, and then everything shut down. And if you really recall, in the second quarter of last year, we lost, as a country, we had a GDP, gross domestic product, drop by about a third. It was 34% in Q2 of last year on an annualized basis. And never in the United States history, since we started measuring GDP growth in, I think it was 1948, did we have such an extensive drop in a single quarter. So our economy, our people, the United States citizens, and you know, and hardworking people were really faced with unprecedented circumstances. Businesses shutting down, you not knowing if you're safe when you go to a grocery store to buy, you know, that loaf of bread, not knowing if, you know, I have elderly parents living with me at home, if I'm bringing something home that's going to potentially kill them. So as a regulatory body, we took an opportunity to say, wait, what do we need to do? And I basically said, what we need right now is utmost flexibility. We need flexibility for our banks to be able to modify loans and work with their borrowers. We all remember in 2007 and 2008 how regulators were you know, sticking to their books for too long, and loans weren't getting modified quickly enough, because what happens is that every time a bank modifies a loan for economic hardship, that loan, based on the generally accepted accounting principles, GAAP, becomes classified as troubled debt restructuring. And basically that loan is impaired. And then even if that loan keeps on paying, the borrower keeps on paying every month, that loan is classified on the bank's books as, for lack of, for lack of technical terms, I'll just say this, bad loan. And more bad loans banks have on their books, the examiners look at them more negatively. So banks were hesitant to modify these loans. So we worked with different banks and different regulatory agencies to make sure that they can modify loans without getting this, bad loan on their books and not having this classification of troubled debt restructuring and impaired loans. And so we've done a number of things. We encourage banks to use their capital and liquidity buffers. We require banks to have a certain amount of capital to be safe and sound and to provide financial stability. So we as a regulatory body don't have to worry about that bank. And then on top of that, they all have some buffer, some percentage of capital, some amount of capital and liquidity that, allows them to dip a little bit, but not much. And so we like to see those buffers as regulators, but knowing how dramatic the impact of the pandemic and the economic shutdowns has been on the consumers and the US economy, we told banks, go ahead and dip into that buffer, monitor it carefully, but dip into it if you're using the money to help the economy, if you're using money to help individuals stay in their homes. So I would say we have provided all of this flexibility. I call it the regulatory whack-a-mole. We weren't waiting to see where the mole is going to come out. We basically were just whacking, trying to figure out, okay, where could the mole come out? Let's preempt it. Let's not have the credit freeze like we had in 2007 and 8. Let's enable people to stay in their homes. And what path do we need to take from where we are to being able to ensure that people can stay in their homes? So we preemptively did a number of things. So I would say that's really how we have approached the pandemic. And I'm proud of the work we have done. I'm proud of the efforts that we have put in. And I was talking to somebody the other day and I mentioned the reason that you don't hear about the FDIC in this crisis is because we didn't have to close banks, even though the economic shock was more sudden and deeper than it was in 2008. The reason that we didn't have to close banks is because banks were better capitalized and had more liquidity going into the crisis. But it was really the regulators, all the work behind the closed doors we did to make sure that banks can stay on the front line, continue to lend to their customers, continue to keep people in their homes, continue to work with borrowers. And so we didn't have the credit freeze, we didn't have foreclosures that drove the property values down. We're still not out of the chaos that the pandemic brought upon us, but we're carefully monitoring conditions. And again, we're being very, very agile and flexible in our approach. And I told our examiners, be prepared to utilize your knowledge and your experience to quickly change how we're looking at things, because we just don't know what's around the corner. But I am optimistic with the vaccines rolling out and the economies improving in different states and around the country that we may be on the upside of all of this.
I can actually attest to that, Chairman, because access to capital is there, the PPP. A lot of the banks are putting that up. I just cannot thank enough everybody. We holding hands, and I was afraid that we're going to have worse financial crisis, but I'm really pleased that everybody's getting help. And by the way, you really have great people, Chairman. I just want to acknowledge all the people, from the examiners from here in San Francisco to Emerson. They're all wonderful. So thank you so much.
I'm very proud of our people. So thank you, Faith. Thank you very much.
It's because you're a great leader. You're a good boss.
I try to be.
Well, that's the power of women. So, Ms. Brand, do you have a question?
Yes, first, thank you just so much for taking the time to answer our questions. The first panel was great, and this one has been just as good. My question is, what role does preparation for the next disaster or pandemic play? And more specifically, what advice do you have for new lawyers interested in using their career to mitigate future inequality?
So here's what I would say. The pandemic has taught us quite a few things about the resiliency of our system, but it has also exposed where we can do better, which is innovation and technological advancement. So that, we had to switch our supervisory team from not being able to go inside of banks to supervise them and examine them to having to do everything remotely. So we have our lessons learned. I'm hoping that at some point we'll be able to do some kind of a publication as to how we handle the pandemic, what we're thinking about, what we've learned, etc. So I would say stay tuned. I can't sell the book, so it'll be free, but it's one of those things that I think is going to be useful for future regulators. With respect to what can young lawyers do to prepare for their careers and to address inequality and the society as it is, I would say the best thing you can do is arm yourself with as much knowledge as you can. And I remember as a young lawyer thinking, I was a securities lawyer, and thinking through a number of these issues, I took every task that came my way. I had to learn about semiconductor manufacturing, and I had to learn about, non-Hodgkin's lymphoma, and I had to learn about, online retail, and any piece of information that you can get, anything that you can do to kind of get another chisel. I call everybody, a diamond in the rough, and you're supposed to get educationally, professionally, as many facets as you can. And so use the knowledge that you gain along the way to empower yourself to become the as well-rounded as you can on a number of these issues, and then use that as a basis to fight social inequality, use that as a basis to create a better society. You never know where a myriad of those experiences are going to be useful to you, but really it all starts with a strong foundation inside of you, strong ethical, strong work foundation, strong educational foundation, and then you'll be surprised how much you can utilize the way you learn how to think, the way you learn how to structure your arguments, and the way you learn just to position your policy recommendations from all of that experience. So I would say just garner as much knowledge and as much experience as you can, and then figure out the best way to channel all of that. And don't underestimate how disparate things that you're encountering can actually make sense in the big picture of life, and certainly professionally.
Thank you for that question, Bryn. We have some Pepperdine lawyers actually that are watching. And I just want to give an advice also for the young lawyers. Don't be a lawyer, meaning help the underserved, help the people, all legal interpretations. As long as you have that big heart, you're going to be a fantastic lawyer. So, all right, Tim, what's your question?
Yes, thank you, Chairman McWilliams. Apologies if you can hear a baby crying in the background, just one of the realities of our new Zoom world. So one of the things that's been in the news a lot lately is the rise of crypto banks like MetalPay applying for FDIC insurance. And I'm wondering what you think their chances of approval are, and where do you see the relationship between blockchain banks and the FDIC and government regulators going in the future?
Sure, it's a great question, Tim. Thank you. And never apologize for a baby crying. It's a good thing. So we can't comment. My lawyers look at me every time I say something on the specific applications, so I can't comment whether or not there's an application or anything about the application about any specific entity. But I will tell you that, building upon our earlier discussion about innovation and allowing some risk in the system, I'm a big proponent of being open to seeing what is the potential of new technology, not just for expanding and democratizing finance, but also for making our system more accountable, for having an opportunity to understand better how the system is structured, and for utilizing tools to ensure there's financial stability. And I do think that we have not taken, the official position on blockchain or cryptocurrency for a reason. I am trying to work with the other regulators to understand if there is a more, I would say, broader United States regulatory policy with respect to a number of these things and how different pieces of the puzzle fit together. But I would say I'm very open to seeing what can be done, how new technologies can be utilized. In many ways, we have been doing the business of banking the same way it's been done for several hundred years. And I always say, if the society did not innovate, it wouldn't evolve. and innovation in banking is nothing new really, since the Medici brothers created a double-sided ledger system. It has been kind of a, leading to the cash machines, et cetera, and then essentially to online banking presence. So I do think that we need to be open-minded. There are great possibilities for new technologies to change the way we think about finance. And the worst thing we can do as regulators is be completely close to it. But it has to be, this new technology and new inventions have to be introduced into the banking system with due emphasis on safety and soundness, financial stability, and consumer protection. So it's kind of like I would say a seesaw experience where you want to do good, but you also want to understand exactly the unintended consequences of some of these things. And we're really open-minded and trying to learn more. As Faith mentioned, we just hired a chief innovation officer, and he's going to be exploring some of these areas for the FDIC and how far can we go to take our banking system to the next level that really is going to be functional and serving the consumers in the 21st century.
Great, thank you. And I hope, Kathy Zhang, you're interpreting this okay. Just let me know if we're talking too fast, because you're right, Chairman always speaks fast.
I do. Faith, I can't help it. I joke that English is not my native language, but my brain works even faster than I speak. So I apologize for not being able to slow down, but I try. I promise I try.
No, it's great. This is recorded, so we can retranslate this. So, and we have a very cute Estella Ogbibor here. She's been, my gosh, she interned with us since he was like, I think, 5th grader. And now she's a young woman now. Estella.
Hi. So first off, I just want to say that I agree with a lot of the comments which stated that Levi Strauss, founder of Levi, would have really enjoyed your story, as he himself was an immigrant. But my main question was, well, I'm very curious about the upcoming FDIC webinar, Possibilities of Big and Alternative Data in Finance and Banking, and what that means for both bankers and their customers with the pandemic, and also the increased use of artificial intelligence within open banking and big data. So how do you see that intersection between banking and the challenges of financial regulation, and how do you think that those will change in the future?
Estella, great question, and thank you for asking it. But did you know that you probably did, because you mentioned it, Levi Strauss actually, what's now known as the Levi's, he used tent fabric to create pants for miners during the gold rush, because their pants would be in those harsh conditions, would be tearing up too quickly, and he needed solid fabric to create pants that would last through the mining, et cetera, et cetera. So phenomenal story of entrepreneurship and taking something that existed and creating something new that now is, 150 years, 200 years later, still popular. I would say that we, as a regulatory body, need to be really open to understanding how machine learning and artificial intelligence can be utilized for good. We also need to be aware of the potential biases that come with those systems and how to manage and account for those biases. And our Chief Innovation Officer actually comes from artificial intelligence background. He had spent a lot of time in this, working in this space and creating algorithms and thinking through these issues. He also spent a lot of time in Africa working on financial inclusion. And here's the irony of the financial systems. More mature financial systems are less prone to being able to implement innovation more easily. The irony of being able actually to go to some of the countries that don't have as developed financial systems as a number of countries in Africa and Southeast Asia, and create completely new platforms and not be bogged down by legacy system is something that I think is underestimated. But for a mature system like the United States, we need to be open-minded to see how artificial intelligence can improve the way we think about credit scoring and availability of credit. I've talked to a number of fintechs who told me that their algorithms are better able to predict the ability of a consumer to pay back their debt and pay down their credit lines than a number of traditional models that have been utilized. So I think there's a great potential here. Again, remember, I am really concerned about including the 7 million of the unbanked people into the banking fold. And if we can use technology to make them become a part of the banking fold, whether that's artificial intelligence, machine learning, or some of the other innovative technologies. I'm all for it. Let's do it. Let's bring people in. Let's manage and regulate those systems appropriately. But let's not turn a blind eye to what innovation can do in this space, because I think it would be detrimental to a number of communities, especially to low and moderate communities and communities of color.
Thank you, Stella.
Thank you so much.
Thank you.
Thank you, Stella.
I think Simon has a question also. Or is that Chase? Sorry.
Hello. Yeah, hi, thank you. Madam Chairman, thank you so much for coming to speak to us today. We greatly appreciate it. Also, I saw that you're visiting all 50 states and you haven't visited Kansas yet, so I hope you get to visit soon.
I have.
Yeah, that's great.
I thought I did. Hold on. We have an office. No, I've been to Kansas. Don't say that. I think I've been at least a couple of times. So I have to go back. Oh, well, okay, well, we got to see you next time. But no, I did make a point of saying I'll go to every single state. We physically, in 18 months, visited 30 states, and then the pandemic happened. So we're waiting to see when we can resume travel. But we've done a virtual visit since then. But I am committed to my 50 states. So be it.
Awesome. It's a great initiative. We appreciate that. So my question for you today is, what actions has the FDIC taken to mitigate the potential risk of our economy reliving the Great Recession of 2008 due to the substantial hardship on commercial real estate? And how does your focus on deregulation toward our financial institutions affect those initiatives?
Sure. So let's talk about commercial real estate first. And it's a great topic because really, when you think about everything changed about the way we use office space during this pandemic. You know, this room used to be a bedroom, a guest bedroom, a tiny little room. You can't even tell how big it is, but look, I'm a short person and this is I'm almost touching the walls. And so we're utilizing office space a lot less. You know, most of you who have offices someplace else other than in your homes probably have not seen that office in a year. And so as we think about that, you know, the notion of working is changing and more people may be availing themselves of telework and telecommuting. But that also means that we have a number of buildings that are going to be vacant in each city if they don't get repurposed. And this is really where the emphasis is. We have 6 regional offices around the United States and 89 field offices throughout the United States for the FDIC, where our examiners are situated. And I have tasked each of our regional directors to take a look at how is commercial real estate, what are the occupancy rates, what are the delinquency rates? You know, some of this is regional, but there's also a cohesive picture. And for most part, what has been happening is that there is a rethinking of how we use space commercially. So a number of offices that used to be just offices, an office building, are now being converted into kind of a hybrid warehouse space as more consumers flock through online purchases and online consumerism. And so there is a great rethinking. The question is, are we going to be able to recalibrate the office space versus this new hybrid approach in a way that's not going to cause great, I would say, shock to the industry and to the banking system. And that's something that I don't have a solid answer on yet. We're monitoring this very carefully. We are concerned about potential delinquencies down the road, with some of the commercial leases being abandoned by businesses that just simply can't afford the rent while they're also adjusting to telework and investing more in technology. But we're hoping that we can assist this shift through regulatory policies that would make it easier not to end up in a place where we were with CRE, commercial real estate, in 2007-8. So it's a very timely question. It's a substantive question that we're looking at, and I just don't have a 100% solid answer on, other than to tell you we're monitoring it and being very, I would say, agile and flexible in our approach as we work with banks that may be struggling because their borrowers are struggling in this space.
Well, Chase, I want to go to Kansas, so you can invite me. I'll go.
Absolutely. We got some great barbecue. You guys will love it.
Oh, or I'm going to go to the Okay, one more last question, Simon Pang.
Hello, Chairman McWilliams. How are you?
Hi, Simon. How are you? Nice to see you.
Always good to see you. You know, I tell you, ever since you are taking over as a chairwoman of the FDIC, I can see a lot of friendly faces of the regulator from FDIC. Thank you for that, for your leadership. And also that, Faith talked about MDI, which is my subject. Later on, we talk about MDI. As you know, the Rural Business Bank always heavily utilize MDI. And also we're working very closely with, national diversity. And also, and one more thing, your picture is always here in my office. So when the regulator come in here, I always bring them here. You know why? Not to way, they just remind them that, oh, I have to be more strict on this bank because Simon knows the chairwoman.
This is why Simon is an excellent banker, because he has the picture of the FDIC chairman in his office, which is supposed to, instill fear in my examiners. Oh my goodness, Simon, that's excellent. Thank you.
We hope to see you soon in DC, and hopefully we'll meet with the new Treasury Secretary Yellen. Hopefully towards the end of the year. Thank you for the support that you have extended to NDC, and we are a diversified group, and we continue to strive and work together. Thank you very much, and stay safe and be well.
Thank you, Simon, kindly, and thank you for everything you're doing to make sure that your community can continue to receive banking services. I personally very much appreciate it, and I really look forward to you guys come to DC again so we can engage and see what else we can do to help.
Thank you.
Great. Thank you, Simon. I want to see my picture on your desk too someday.
Yours is in front of the main entrance.
Oh, okay, you're right. All right, so there's a question here. Actually, two more questions before we go. Question from Claudia B. How can you ensure that if banks join fintech companies more broadly, then the products and services will be co-opted by fintech and therefore less regulated?
Have you met us? I like to joke that our examiners can be pretty tough, and justly so. And so when we look about these issues, banks partnering with outside entities is nothing new. There is nothing new to that. In fact, we have different rules and regulations that govern third-party relationships with banks. And so banks can outsource anything from how they secure their data to how they operate their IT systems, how the ATMs operate. I mean, they outsource a number of things. So none of this is new. And by the way, most of the things they outsource are technological in nature. So when we talk about a fintech partnering up with a bank, really it's an ability for us, and I say this somewhat selfishly, it's an opportunity for us as a regulatory body to bring that fintech into the federal regulatory fold, because now we get to supervise that fintech through third-party service provider regulations that we have through the bank. Now, the bank is always the primary entity on the hook for consumer protection and safety and soundness. So even if the fintech makes a mistake, it's on the bank. So the bank has an extra added incentive to be extra responsible in their partnership with the fintech, knowing that the regulators expect the bank to be responsible for any minuses that may, or any negative aspects of the relationship with the fintech. So I would say I am really not concerned about the bank being co-opted by a fintech as much as I am, frankly, more concerned about banks and consumers. This is really all about the consumer at the end of the line, losing an opportunity to provide more products, provide more services, drive the competition, drive the prices down and availability up. And I think if we overly regulate this space, or if we just close the gates, we're going to have an issue with where does innovation happen. And if it happens outside of the banks, on the federal regulatory level, the FDIC doesn't get to regulate it. And B, you will have an ad hoc approach to how it's being regulated by each of the states, which I know play a very important role. But nonetheless, there's not a cohesive federal regulatory response. So I see actually benefits to this. We have to be vigilant. We have to be smart how we do this. But I don't want to close the gates and shut off millions of consumers that could be brought into the banking fold by saying, it's too dangerous or we can't manage it. I think it can be managed. I think it can be regulated. My examiners and supervisory staff tell me that's the case. Our lawyers say that's the case, and I will rely on their advice on how we proceed as we structure these relationships.
I agree with you. I think, with COVID, digital banking is it. So
yeah.
Before we go, I'm going to ask Pastor Jack to pray for you, to pray for FDIC, to pray for all the audience. So Pastor Jack.
Thank you, President Bautista. Oh, God bless you, Jelena. What an amazing story, multiplied in this great nation. We are a nation of immigrants. If we aren't the first generation, we aren't far from that first generation. And so God bless you. Yes, you have a lot of work. You have a lot on your shoulders, and you wear it well. So blessings to you. Let's pray, and let me be sensitive to the over 100 folks we have on the line. Always sensitive to the different faith traditions that make up the United States of America. This happens to be a very special season for Christians. We're moving towards the Easter season, the Passion season, the suffering of our Lord and Savior, and so there's a lesson in every religious tradition, and the lesson I learn is that life is not easy. We carry a cross, and so all of us have that cross. I'm going to pray for your and for other panelists coming on. I'm going to pray for your personal life. Our president's personal life. You didn't know that. Did anybody notice that ring? She is pledged to be married. And so these are all important things. We have professional lives, but we also have our personal lives. And we believe our Maker is very concerned and lovingly concerned about each and every portion of our life. So would you join me in a prayer this morning for our FDIC chairwoman, for the different challenges in our Asian American community, and also kudos to women. Do you know that none of us would be here without a woman? And so let that sink in. Good Lord, thank you. Thank you for the expertise in this call. Lord, we are concerned for the underserved, for the marginalized. And when we come together as community, when we understand our responsibility from human to human, that you would let us recognize, and that you would recognize that we want to do good, we want to do great for everyone in this country and beyond. We are a model to this world. Let us be a shining example. I pray for Chairwoman McWilliams. I pray for her home. I pray for her heart. I pray for her health. I pray that you would just surround her with a sense of importance, significance, and the humility that she displays. Bless her and keep her and hold her tight, and put even more destiny into those dreams. We ask this in your wonderful name. Amen. Amen.
Thank you.
Thank you, Pastor Jack. Thank you. That was beautiful. And I think people often forget that everybody you meet, regardless of the faith or devotion, has a cross to bear. And I just want to thank you personally, because your words. My mom, today's her birthday. She's turned 80 and she has Parkinson's. So thank you for those words.
Happy birthday.
Thank you very much.
Thank you all. Thank you so much, Chairman McWilliams. You're adorable. You're beautiful. Thank you.
Thank you, Faith, and thank you all. God bless you. You are truly at the front lines. You know, the pandemic has hit California especially hard. My heart goes to you, your communities. I still consider myself a part of that community, of your community. Someday, maybe I will be physically a part of that community again. But I just want to tell you that treating each other with respect and dignity, and treating each other with just the utmost humanity has never been more important. We're challenged on so many levels, as Pastor Jack mentioned. that I encourage you all to reach above and beyond where you've reached before and just be the best human you can. That is the way I try to lead this agency. And, you know, I bring my humanity, I bring my person to work every day. And yes, I'm the FDIC chairman, but I'm a mother, I'm a daughter, I call myself a day nurse and a night nurse for my mom. And it's important that we always keep the humanity of our jobs and never take ourselves too seriously, and remember what's really at stake here, which is making people's lives better. And so thank you for this opportunity. God bless you. And thank you for the work you're doing on the ground.
Thank you all. And we'll be right back. We're going to take a 3-minute break.